Happy Friday, IHMC friends and family. It's Shayan with Integrity Home Mortgage, back with your weekly mortgage market commentary. So mortgage markets spent the week trading more or less sideways all week. Economic headlines were light, and everyone was really just kind of waiting around for Chair Powell's speech at Jackson Hole this morning. He shared a lot of info in what was his final speech, final Jackson Hole speech as Fed chair. But all the market really needed to hear was the following line that was delivered in the first couple of minutes. So that is, the baseline outlook and the shifting balance of risks may warrant a change in policy. He leaned into the issue of jobs, highlighting that the downside risks to employment are rising as a result of a slowing in both the supply and demand of workers. Basically saying that the combination of slower hiring and a shrinking labor force creates an environment where if things go bad, they could go bad really quickly. He took some time to acknowledge the fact that price risks remain from tariffs, but the Fed really doesn't believe that that will result in persistent inflation, just given the outlook on economic growth. So as it relates to their dual mandate of price stability and maximum employment, it seems the Fed is now seeing the balance of risk tilting more towards employment. Now, there's been an expectation that a cut would happen in September, but there really has been some question as to whether that cut would be a hawkish cut or a dovish cut. A hawkish cut meaning the Fed still focused on inflation, they would make a cut and then wait to see what happens with the inflation numbers versus the job numbers. A dovish cut would be really more like a series of programmatic cuts in order to stave off a recession and buoy labor markets. Well, so overall, Powell's tone was one that was a little bit more dovish than markets expected. And the chair now seems to be leaning more towards the opinion of Governors Michelle Bowen and Chris Waller, both of whom you will recall voted in favor of a cut back in July. So Powell didn't come out and explicitly say that a cut will definitely happen in September. Nobody was really expecting that to happen. Keep in mind that between now and the next Fed meeting, we'll still get another round of key inflation data and another jobs report, which could change things entirely, right? What he did do was leave the door wide open for a rate cut in September, and that pushed the odds of the Fed going 3 for 3 on cuts for the remainder of the year up by 15% from where they were just yesterday. This was enough to flush out the remaining investors that were still holding on to a view that cuts would not happen in September, and that's pushing Treasury yields down sharply. 10-year rates are now sitting right around 4.25%, and mortgage prices are up by over 30 basis points and trading now at their best level since October 2024. So despite Powell's maybe, that definitely sounds like great news for me. That's all I've got this week, and we'll see you guys next time.